This is Wallet Brief, where we break down what actually moved the U.S. economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. For most of 2025, the housing market was locked in place. With 80% of homeowners reporting a mortgage rate below 6%, the rate lock-in effect left many with a strong reason to stay put. Home sales dropped to multi-decade lows. Buyers couldn't afford high prices combined with mortgage rates that peaked above 7% in early 2025. Sellers refused to list because moving would mean giving up their low pandemic-era rates. The result was a frozen market, not crashing, just stuck. By January, existing home sales had fallen to a 16-month low, and both sides were waiting for something to break. On February 12th, Freddie Mac reported that the 30-year fixed-rate mortgage averaged 6.09%, down from 6.11% the previous week and well below the 6.87% rate from a year ago. Some lenders are now offering rates as low as 5.85%, marking the lowest borrowing costs in over 3 years. Late last week, mortgage rates dropped to their lowest level in more than 3 years, driving weekly purchase applications and refinance activity to jump. But despite more affordable borrowing costs, the market remains sluggish. Existing home sales hit a 16-month low in January as high prices and economic worries keep would-be buyers on the sidelines. National home prices grew just 0.9% annually in December, one of the softest rates since the post-Great Recession recovery. Housing inventory rose 10% year-over-year through January, with 9 states now above pre-pandemic 2019 levels: Arizona, Colorado, Florida, Idaho, Nebraska, Tennessee, Texas, Utah, and Washington. Regional differences are stark. The Midwest and Northeast remain strong, with states like New Jersey up 5.5%, Illinois up 5.4%, and Connecticut up 5.1%. Meanwhile, Sun Belt markets like Punta Gorda and Austin are facing challenges, with prices softening as new home supply floods the market and builders offer incentives to maintain sales. The housing market is entering what economists are calling the Great Housing Reset. It won't be a quick price correction or a recession, but a years-long period of gradual increases in home sales and normalization of prices as affordability gradually improves. For the first time since the Great Recession era, incomes are rising faster than home prices for a prolonged period. The trend is stabilization, not collapse, but also not relief. Mortgage rates around 6% are historically normal, not low, and many potential buyers remain priced out. If you're trying to buy, this is the most opportunity you've had in years, but it's still not easy. Mortgage rates around 6.29% paired with slightly rising inventory mean you finally have some negotiating power, especially in Sun Belt states where prices are softening. If you're a current homeowner with a rate above 7%, refinancing could save you hundreds per month. If you're locked into a low pandemic-era rate, moving still means a payment shock, so most homeowners are staying put. Gen Zers and young families will feel the pinch of still high costs, with many opting for non-traditional living situations to afford housing. And if you're renting, expect rents to rise about 2 to 3% by the end of 2026 as apartment construction slows. Watch mortgage rates closely. They're holding near 3-year lows, but stronger job numbers could push them back up if the Federal Reserve delays rate cuts. The Fed's next meeting is scheduled for March 17th through 18th. Also pay attention to new listing data, especially in markets like Florida, where seasonal inventory typically begins rising in February. If sellers keep pulling back and inventory doesn't rise further, the buyer's advantage could disappear. The spring home buying season starts soon. If rates stay stable and inventory keeps climbing, this could finally be the year the market thaws. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with the updates that matter. Until then, stay informed and protect your wallet.